everyone and welcome back. We start with the new part of the auditing syllabus, the actual audit process, and working into what we as auditors are required to do when conducting an audit. We have covered the legislation that the companies have to adhere to in their governance and the legislation that the auditors have to adhere to in performing the audit. So now we move into the auditing standards that will guide the auditor throughout the audit process. Before we get into the work, I do, however, want to just give you some background into why you are required to write so much during my lectures. You'll find that you do not take in as much information when you are solely listening or looking on the screen. There's a school hack that says writing something is equivalent to seeing it 7 times. So guys, I've lectured topic after topic after topic, and I've learned these are the crucial parts that I need you to write down. Obviously, if you're just writing and not paying attention, you are going to find that you don't quite understand. But when you go back to it and see it, you wrote that down, it will come back to you a lot quicker than if you hadn't written something down. So understand there's method in my madness. This is an online course, which means you need to be engaging yourself as much as possible, and that's why I do this. So don't sit on your bed and have your laptop open and listen. You need to have your laptop on a desk, you need your slides printed or the notes printed out, your questions printed out, and you need to be following your notes that are printed out on the screen and making notes on your notes when I make them on the screen, and referring back to your notes after the lecture, going over what you wrote down, making sure that you understand it. Okay, we are not Netflix here. We are online CTA course, and we got to make sure that you engage and you take as much as you can out through watching a lecture as absolutely possible. Okay, so now let's go and have a look at the schedule for this part of the syllabus so we can see what specific standards we are going to be addressing in today's lecture and at what SACA knowledge level you are required to know this information. In our schedule, guys, you can see we are doing week 1, audit process and pre-engagement activities, and the applicable standards ISA 200, ISQM1, ISQM2, ISA 210 and 220. Okay, remember these were revised, previously ISQC1, and now it's been replaced with International Standard on Quality Management 1 and 2. So if we look at the SACA knowledge levels for each of these topics. So first one, ISQM1, which we currently still have here as ISQC1 per SACA, is a level 2. Then the overall objectives is going to be addressed in week 1. ISA 200 is a level 3. And again, acceptance and continuance in week 1 is a level 2. In week 1, we will still be doing agreeing the terms, which is a level 3. Quality management for the audit of financial statements, ISA 220, is a level 2. So we come down to the audit process. We are addressing the audit process in week 1, and it's a level 3. And the rest of the standards that have been highlighted will be addressed in weeks 2 to 4. So let's start with the audit process. The audit process. So guys, this is not new to you at all, that the audit process comprises of the pre-engagement stage, which is where we analyze whether we want to accept this client or not. Take little information and any information that's freely available and decide yes or no. And if we decide yes, we then move on to planning, where we'll gather a lot of information from the clients and any other means necessary. And in the planning stage, we plan the audit. We understand the entity, we understand their transactions, we understand their internal controls, and from that understanding, we are then able to determine how we are going to test based on where we believe the risks lie, the risks of material misstatement, because we as auditors are simply expressing an opinion on the fair presentation of the financial statements. And so where we want to focus is on the areas that we think the financial statements have a possibility of being materially misstated. And if we test those and find that they are not materially misstated, then we will give the correct opinion. So we perform based on what we picked up in planning, what we picked up from understanding the entity, and then we conclude off the work of the performing stage. At no point here have we mentioned any of the legislations that we've already looked at. And now we know there is the Companies Act, there is the King Code, there's the CPC, the APA. So where does this legislation fit in? Well, the CPC and the APA, Companies Act and King all have elements for which the auditor has to comply. Companies Act talks about the auditors and auditors rotation and who the auditors cannot be in order to maintain independence. So in taking on a client and in performing, the auditor needs to make sure that they comply with the auditor elements of the Companies Act, the auditor elements of the King Code, and then they have to comply with the CPC and the APA, because the CPC is aimed at chartered accountants, and there's a specific 2 parts aimed at chartered accountants in public practice, so as auditors. They have to comply with the fundamental principles and independence when in public practice engaging with clients. The APA is specific to auditors performing their duties. It discusses their duties, their roles, who they have to be in order to adhere to the APA, and then if there are any issues in conducting the audit, reportable irregularities identified. So all of these are applicable throughout the audit process for auditors. Then we got to consider that the Companies Act, the King Code, and the CPC are also applicable to the client. The client, being a company, needs to adhere to the Companies Act. The client should comply with the King Code, being a company, a code on corporate governance. The client, if they have any CASAs, would have to adhere to the CPC, specifically the in-business part of the CPC. So, the legislation, Companies Act, King, CPC is applicable to the client as well. And so it's important that when auditors go and conduct this audit, having adhered to all of the legislation applicable to them, they need to go and see, has the client adhered to all the legislation applicable to them? When we understand the client, is there risks they are not adhering to the Companies Act, to the King Code, to the CPC for those in business? All of this information needs to be taken into account. So when we audit a client, we are going to understand them and we are going to identify where there could be risks of material misstatements in their financials. those risks could come from non-compliance with anything, IFRS, the accounting standards. They could come from non-compliance with Companies Act, where there is a section requiring specific compliance for transactions and they're not adhering to that. It could be non-compliance with industry regulations. It could be non-compliance with tax regulations and legislations. And so, all the legislation we've done is applicable and needs to be considered by the auditors throughout conducting the audit process. Okay, where does the audit process and all of this fit into our tests? Well, pre-engagement and planning is going to be addressed now in test 2, performing in test 3, evaluating and concluding in test 4, and the legislation has been addressed in test 1. So guys, now I'm not just going to leave the audit process as these 4 stages and we move on to pre-engagement. I want us to discuss this audit process so that we've got a very good understanding of what auditing is before we just jump into the specific standards and sections. So the first thing I've said is I want to ask you 3 questions. The first question, what is the purpose of an audit? I'm going to ask all 3 so that you can think. Remember exam technique recording. Look at all the questions, let your brain start working on answers, and then we'll get to them individually. The second question, why are audits necessary? And the third question, how is an audit performed? Okay, so before we start auditing, we need to understand what is the purpose of an audit. Now, I know a lot of you are just going to say to express an opinion, and you wouldn't be incorrect. Yes, we have to express an opinion, but that's something you've studied in all your undergrad. What do we do for an audit? We express an opinion. But about what? What are we expressing an opinion about? How do we go about expressing an opinion? These are very important principles that you need to consider, because if you can understand what auditing is, then it's going to make learning and answering auditing questions a lot easier. So what is the purpose? It is to express an opinion. However, in ISA 200, the standard, the overall objectives of an independent audit and the conduct of an audit in accordance with the ISAs, it says to you, in order for us to express this opinion, the auditor is required to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error. So yes, we are going to express an opinion, but about what? About whether the financial statements are free from material misstatements. And in order to express that opinion, we need to have some sort of backing, reasonable assurance that proves they are free from material misstatements. What is reasonable assurance, guys? Reasonable assurance is sufficient and appropriate evidence to reduce audit risk to an acceptable level. So we're saying, in order to express this opinion, we need to have sufficient, which is enough, appropriate, which is reliable, and relevant to what we're trying to prove, evidence, so that the audit risk, which is that we give the incorrect opinions, audit risk is reduced to an acceptable level. So that ultimately we're saying that we aren't going to express the incorrect opinion. We're going to express the correct opinion. So guys, we need to go and make sure in doing an audit that we get enough evidence, and that evidence is relevant to what I'm trying to express an opinion on. It's good enough to back my opinion, so that I give the correct opinion. And so, there's my answer to question 1. What is the purpose of an audit? It is to express that opinion by obtaining reasonable assurance. My next question, why are audits necessary? Why do we have them? Who wants this opinion? Why is this opinion valuable? The purpose of an audit is to enhance the degree of confidence of the intended users in the financial statements. So, why is audit necessary? Because users of the financial statements want to believe the financial statements. And why would they believe it? Coming from the directors of the company who are able to prepare those financials and put whatever they want in them. They get confidence when an auditor who's independent to the client gives an opinion on those financial statements. And so that is why it is necessary, because users rely on the auditors to say that those financials are free from material misstatement. And guys, users are you and me. If we want to invest in a company, if we want to buy shares, we want to go and make sure that those financials say it's worth investing. But of course the company is going to say it's worth investing. But is it really? And that's why we want the auditor's report to show, it is really worth investing. So it's for you and me, it's for investors. It's for staff or potential staff. It's for customers and suppliers or potential customers and suppliers. They want to make sure that what these people are putting in their financials is actually reasonable. So that is why there is such a job for auditors, because we come in as independents, we look at all the financials and everything that's in there, and we go and test it and get enough good evidence to say, yes, you can rely on these, no, you can't. What are you testing them against? Against the regulations that say this is how you should put this amount in, and this is how you should determine this amount. So we've got to test the laws and regulations that this company has to adhere to come to the conclusion, yes, the financials are free from material misstatements. And then how is the audit performed? Well, obviously, if this ISA 200 has given us the answers already to question 1 and 2, it's going to give us the answer to question 3, because the heading is the conduct of the audits in accordance with ISA. So, how do we meet the objective, which is to express our opinion? We've got requirements. These requirements are listed here. The auditor must comply with the ethical requirements. The ethical requirements, guys, are in the CPC, and those are the 5 fundamental principles and independence. Guys, those 5 fundamental principles: integrity, objectivity, confidentiality, professional behavior, and professional competence and due care. So we have to comply with the CPC. That's already now that one legislation coming in. We have to plan and perform the audit with professional skepticism. So professional skepticism, we just have to keep questioning things. Just don't accept answers because the client's given us an answer. Question it. Make sure that you're comfortable that that answer makes sense. We have to plan and perform the audit with professional judgment. So don't just accept things. I need to use my experience to help me decide, yes, no, I'm comfortable, I'm not. I need to obtain sufficient and appropriate audit evidence. We've already seen that. Sufficient and appropriate audit evidence helps us to get reasonable assurance. And I need to conduct the audit in accordance with the ISAs. So where an ISA, an International Standard on Auditing, is applicable for this audit, I need to adhere to that standard. If I meet all of these requirements, guys, I will do the audit and express the correct opinion. Okay, because provided I'm doing what I've been told to do, I should come out correct at the end. Okay, so that's just a little bit of background on auditing so that we already start questioning what we're doing in this subject instead of think I'm just going to study everything off by heart. I've got a couple more questions that I want to address because these are going to lead me into my next standard. So, who performs an audit? And who is credited with performing the audit? So, easy one. Who performs the audit? Well, if you guys are doing your articles, you know, you do. Your article clerks. You guys do all the hard work. I know, I was there. I really didn't enjoy my articles. You've got audit managers who go and review the work. You've got an audit partner who goes and signs off. So ultimately, you've got a team of people who do the work. But who gets credited with performing the audit? And guys, I'm going to drop some names here, and this might help you come to the correct answer. Enron, company's name. VBS, bank. Okbay. Most recently, Steinhoff, Wirecard. So some company names. All of these companies have been involved in significant scandals when it comes to their financials and the audit findings. Who got credited with expressing the wrong opinion or not doing enough work, not finding out the scandalous, fraudulent transactions? Was it the clerk who did the work, or the manager who reviewed it, or the partner who signed off? No, it was the audit firm. It was KPMG for VBS and Okbay. It was EY for Wirecard. It was Deloitte for Steinhoff. It was Arthur Andersen for Enron. The audit firm gets credited with the work because the partners ultimately are the audit firm. So what are we saying here? Well, we've got a standard that tells us how to go about doing the work for my clerks and my managers and my partners. But at the end of the day, a firm gets credited with the work. And if that work is insufficient or not relevant, so it's not appropriate, the firm gets the rap for the incorrect opinion. So why is that important? Because your firm has lots of people, lots of employees doing the work. And surely your firm wants to make sure that it doesn't matter which of those people were doing the work, they would come out with the same answer. So a firm wants consistency in a way that the audit is conducted so that whoever is responsible for whatever work is done would come out with the same conclusion as the person next to them and the person next to that person within the firm. Because ultimately, a firm does not want to have incorrect opinions and taking the rap for poor audit work. So how can a firm ensure consistency in a way that an audit is conducted by personnel within that firm? How can they ensure that anybody who was asked to do that audit would come out with the same answer, would do the same work, would come with the same conclusions? They need to ensure that they've got quality control within their business. There must be quality control so that all quality would be the same irrespective of the person, because there's so many different people in the business. And so, how can they ensure that there is quality control? They need to develop policies. They need to develop codes. They need to have a set of rules on how you go and conduct an audit. But not only on how you go and conduct an audit, they need to have quality control on who they employ, because that's who's going to conduct the audit. So who do they employ? They need to have quality control on how an audit is managed. How are the people who they employed managed to ensure that ultimately the conduct of the audit is the same? And so this quality control that we are referring to is the new ISQM1 quality management standard, which requires that there are quality standards set in place for key areas within the business that require set processes or ways of addressing those areas.